Hello friends. Friends, we are going to continue with share capital, right? And we have been discussing about issue of shares. Issue of shares for cash. Right? This is what we started with. And in that we studied that issue of shares for cash can be in lump sum, right? Or in installments. In case of lump sum, the whole money is called at the time of application. That is, you call for applications from the public to whom you want to issue shares, right? And you say that at the time of application only bring all the money. Clear? In case of installments, what we have, some money at the time of application. That if the face value is rupees 10, we call rupees 2 at the application. That is upon the company, right? Then some money at the time of allotment of shares. Then the remaining money can be in calls. That we call as first call, second call, right? That all depends upon the company, the articles, the memorandum of the company. Clear? Now, in the last lecture, I touched upon that this can be further issued in two types, that is at par or at premium, right? In that I told you at par means we are issuing the shares at face value. Issue of shares at face value. Now you all know what is the face value. If you are issuing 1 lakh shares of rupees 10 each, rupees 10 is the face value. So at par means we are issuing the shares at the face value. What we have done so far, I did one practical problem with you. In that we issued the shares at face value. That is, if it is the face value is rupees 10, we are issuing at rupees 10 only. Now we are going to discuss is at premium. At premium means issue of shares at more than the face value. At more than the face value. Clear? That means if you are issuing 1 lakh shares of rupees 10 each. This 10 is the face value. If you issue at 10 each, then it is issue of shares at par. If you are issuing this at rupees 5 premium, that means you are issuing this share at rupees 15. 10 plus 5. This 5 is the premium on issue of shares. Clear? Now, write down premium on issue of shares. Right? It is issue of shares at more than the face value. Clear? This is issue of shares at more than the face value. Now, premium received will be credited to a separate account called securities premium reserve account, right? Now we say that if we receive the premium on the issue of shares, right, what is the premium? Rupees 5. If we receive rupees 5 on the shares, that premium will be credited to a separate account called securities premium reserve account. Now, why it is being credited to a separate account and not along with the share capital? Why the premium received is being credited to a separate account? The second point, because this premium cannot be freely used for operations of business. Why it is being credited to a separate account called the securities premium reserve account? Because this premium cannot be freely used for operations of business. This reserve, this securities premium reserve, is not free to be used for the routine operations of the business. There are specified operations that have been defined for which this securities premium reserve can be used, right? That is why any premium that is being received on the issue of shares will be credited to a separate account called the securities premium reserve account, and this reserve cannot be freely used for the routine operations of the business. The capital money that you are receiving, the face value that you are using, that you can use for the routine operations. This securities premium, the premium on the issue of shares, you cannot use for the routine operations of the business. Clear, friends? Right? Now this, where is this all written? That this premium cannot be used, that we have to credit this premium amount to a separate reserve account. This all is written in Companies Act. This all is written in Company Act 2013. Right? So this issue on premium is being governed by Company Act 2013. In the very beginning we did that any issue in the companies, right, that is being governed by Company Act 2013. Earlier it was Companies Act 1956. Right? Then a whole new act was written and it was passed in year 2013 and it was named Company Act 2013. Clear? Premium on issue of shares, that means we are issuing the shares at more than the face value. The premium received will be credited to a separate account called the securities premium reserve account. Why it is being credited to a separate account? Because this premium cannot be freely used for operations of business, right? And this whole issue on premium is being governed by Companies Act 2013. Clear, friends? Right? Now, how to do this, how to deal with this practically? Let's see a practical problem. Y Limited issued 20,000 equity shares of rupees 10 each at a premium of rupees 2 payable along with the application. All the shares were applied and duly allotted. Pass necessary journal entries and also show the balance sheet of the company. Right? Now see, the question doesn't state that you have asked for money in installments. That means the whole of money you are calling it with application, and it is clearly written that premium of rupees 2 is also being called at the time of application. So how much money you are getting at the time of application? 10 rupees the face value and 2 rupees premium. In all you are getting 12 rupees. Right? So can you tell me the journal entry for this? When you receive application money, what is the journal entry? Bank account debit to equity share application. Now earlier I wrote share application, but in the further questions, when you will be given equity and preference shares, you will have to specify on which shares you have received application money. You have to specify whether these are the equity shares or whether these are the preference shares. Clear? So how much money have you received? You issued 20,000 shares. On that, you received 10 rupees face value and 2 rupees premium. That is, in all you received 12 rupees multiplied by 12. This comes to 2,40,000 and 2,40,000. Clear? Now at the time of allotment, what you do? You normally transfer this application money to the capital. I'll say equity share application. You debit this account, and which account is credited? This amount is 2,40,000 to equity share capital. Now, how much will be the capital amount? Remember, share capital is the amount that we are going to use for the routine operations of the business. This is the face value. What is the face value? Rupees 10. So, in the capital, we are going to take only rupees 10. That means we are going to take 20,000 into 10. 2 lakh. The difference is the premium that we have received, and it will be credited to securities premium reserve account. How much? On 20,000 shares at the rate of rupees 2, this comes to 40,000. Clear, friends? How we are dealing with the securities premium? Any premium received will be credited to a separate account called securities premium received reserve account, right? Equity share capital will be credited with the face value, because that money we are going to use freely for the routine operations of the business. Securities premium reserve account cannot be used for the routine operations of the business. Right? In the Companies Act 2013, there is a section 52 that defines the operations for which the securities premium reserve can be used. It cannot be freely used for the routine operations. So equity share capital will be credited with the amount of face value, and the premium amount will go to securities premium reserve account. Clear? Clear, friends? Now, how to show this in balance sheet? Let's prepare a balance sheet extract of this question. Now, the balance sheet we will prepare as per Schedule 3 Part 1 of Companies Act 2013. Right? Remember? Okay, this much is enough for the balance sheet. Okay, the first item is, first we show equity and liabilities. Right? In this, the first we will show shareholders fund. We discussed this part in the earlier lecture where I told you about the disclosure in balance sheet. In this, first we show share capital. So we have to find out this amount. Then the second we will show is reserves and surplus. Under this, we show all the reserves. And now you can correlate from this only that we have opened a securities premium reserve account. So you might get a fair idea that we are going to show this figure here, right? But how we will show is, I will tell you in notes to accounts, right? Then on the second part we say assets, right? In assets we'll have current assets. In current assets we will have cash and cash equivalents. Right. Now we have to find out basically first these two figures. For that we prepare notes to accounts. What we are going to prepare? Notes to accounts. Right? See, notes to accounts are very, very important, right? Now we have discussed how to show the share capital in notes to accounts, right? So I'll recommend all of you to go fast and prepare this, right? First of all, what we take? Authorized capital. Here in the question, the authorized capital is not specified, so we can leave it, right? We can say this much equity shares of rupees 10 each. The face value we know that it is 10, but we don't know how much is the authorized capital. Then issued capital, right? Remember, we are given issued capital 20,000 equity shares of rupees 10 each. How much? 2 lakh. So 2 lakh is the issued capital. Then what is the third part? Subscribed capital. Now in this case, the capital has been fully subscribed, isn't it? Because the question clearly states that all the shares were applied and duly allotted. That means we have received money on all the shares, right? What is subscribed capital? We write it as subscribed and fully paid, right? In this I will say 20,000 equity shares of rupees 10 each. How much? 2 lakh. Now you will say that, sir, at the time of subscription we received rupees 5 as premium also, isn't it? Sorry, how much is the premium? Rupees 2. We received rupees 2 as a premium also. Then how we are going to show that? We are not going to show that under the share capital. Under the share capital we are going to show only the face value, right? Because the securities premium reserve we are not taking to the capital, where we are taking as to a separate account which is known as securities premium reserve account. So in the notes to accounts we will prepare the second note for reserves and surplus. Under the reserves and surplus I will show this as securities premium reserve account. How much? 40,000. Clear? So this is 40,000. So now you have got two figures. This share capital is how much? 2 lakh. Here you will show the subscribed capital, right? And reserves and surplus 40,000. Now I have written cash and cash equivalents. Can you tell me any entry related to cash? 2 lakh 40,000. What is cash and cash equivalents? Anything that can be converted, readily converted into cash is cash equivalents. So the third note we will prepare is cash and cash equivalents. Clear? Here I will say cash at bank. How much is the cash at bank? 2,40,000. Clear? This is how you are going to prepare notes. You are going to give all the details in the notes to accounts. Clear? What is the total of the liability side? 2,40,000. What are cash and cash equivalents? 2,40,000. So this is the total of asset side, 2,40,000. Clear? So this is how we prepare the balance sheet, right? Clear? Under share capital, we are going to take only the face value. Any premium received on issue of shares will be transferred to a separate account that is called securities premium reserve account. And in the balance sheet, we will take this securities premium reserve account under reserves and surplus. Clear? And in the capital, we only take face value. Clear, friends? Make a note of this, that in balance sheet, under share capital, we'll only take face value of shares, right? Clear? I hope the treatment of premium on issue of shares is clear to you, right? Just remember one thing, that this securities premium will be credited to a separate account, that is securities premium reserve account, right? Because it is not freely available for the routine operations of the business. That is given in Companies Act 2013. Clear, friends? So this is about issue of shares at a premium. If you have any queries, just send me an email at ksjteaching@gmail.com. Right? Now, from the next lecture, we are going to start a very important topic. This is one of the most important topics of share capital, that is oversubscription of shares. I'll go a little bit slow in this, right? Because it is a very important topic. It is a bit technical topic. You will have to make a lot of calculations in this, right? It is easy. Try to understand it. It is very easy, right? But it is a bit technical. We'll go slow in it, right? So that's all for this lecture, friends. Thank you so much.